Here are my revised and edited and a little bit more clear price targets for price target guidance, of course, for Arcimoto. So what I expect and what they're kind of expecting in their forward-looking statement, to Arcimoto at least, is by late 2022 to 2023, expected 50,000 units per year. And now I know they're expecting $10,000 per unit, but I want to give a little bit of a range so that I can have a range. I think that's very good. It's a little bit more of a margin of safety in my expectations. So $10,000 to $12,000 per vehicle. Then we're using a PS ratio of 5 to 10, and then if we look at their how much revenue expected by multiplying the 50,000 units times 10,000 sale price or 12,000 sale price, anywhere between there, you get 500 million to $600 million in revenue, and that indicates a 2.5 to $3 billion market cap. And then we can expect the shares outstanding to possibly grow, and so we have that margin of safety. So I have two price predictions: one with the 50 million and one with the shares outstanding today, according to Simply Wall Street, which is about 31.86 million. So remember, perfection is just a direction. This is the direction that I think Arcimoto stock FUV will trend. I think that's where it'll trend based upon my predictions. And so why do I think these predictions will roll out? Because Mark Frohmeyer, because of Galileo of Hyperchange, Sandy Moreau and Associates, that will help them really get there. DHL and other partnerships and anything like that. Manufacturing facility, $185,000 plus 185,000 plus square feet of manufacturing space. Hire Car and other partnerships like that. Tilting Motorworks acquisition. I think that's their first acquisition. That's really not just going to make it more fun. It's going to improve their braking, and it's going to make it more safer. Really cool, and it's really more of a competitive advantage for them. Then also, we already have a good bit of Archimotos on the road for the word of mouth to really start going into effect. So. And there's also other things, of course, but those are some things. So also we can see, like I said, $10,000 average unit price, 50,000 units sold, and then we implying a 5 PS ratio on it, which when I'm looking at other companies, I think that's pretty easy. Because it seems like all of them, of course, has been above a PS ratio of 5. 10 is actually more probably like the actual target. But remember, price target, when we look at a target, it can be anywhere or on there. It's just a kind of a guidance. A target is really just a guidance, of course, but you really want to try and reach that target. So 500 million, so that's 500 million sales with a PS ratio of 5. You get a $2.5 billion market cap. With using a price target with the shares outstanding of 50 million, you get $50, and with the shares outstanding of 31.86 million, you get $78.47. So let's say like I said, it's a range of PS ratio of 5 to 10. So I want to show you with 10 too. Well, you get a $5 billion market cap, which would give you shares price of $100 with that, of course, and with $156.94 with that, of course. But we're leaving it at 5 because that's what I expect as that's just like my target. But my bull case is like a PS ratio of 10. So let's look at profit margin. So I have a 90p ratio, and then I have a profit margin ranging from 2 to 14%. Not that I expect them to range from 2 to 4%. My range I expect them to do is anywhere between 6 to 10%, of course. And so here's what the net income will look like. This is what the market cap will look like, and I got that from multiplying the net income times the expected P ratio. And then with 50 million shares outstanding, this is what the EPS or earnings per share will look like. And with shares outstanding of about 32 million, you can see what the EPS will look like for that. And then you get a price per share, and then you get a price per share with 32 million shares outstanding and a price per share with 50 million shares outstanding. So you can see, and I say 32 million, but I mean 31.86 million shares outstanding, of course. So like I said, I would think it will range from 6 to 10%. And remember, I'm not really looking at it from profit, really, honestly. I'm looking at it from revenue, but this is what it will look like. In my opinion, if they even have profit there, this is what it will look like. So that's an if, okay? So yeah, and if they don't have profit, doesn't mean that the company will go to zero. Even though that is the risk, that's like the bear case scenario. Of course, for all companies, that is if it goes to zero, which I highly don't think that'll happen. Like I really don't think that'll happen at all. But if they do have profit, that's just an if. It will be 6 to 10% profit margin in my opinion. So you can see what it will look like. So here's the price. So ranging from $54 all the way to $141.24. Or if you're looking at it from here, So anywhere from $84 to $90 based upon that. Now let's say it's like a value company. It's value as a value company. Let's say a great value of a P ratio of 20. We can even say a P ratio of 15, but yeah. So 6 to 10% P ratio of 20, and so we can see kind of what it will look like. So this is what the price will look like. So obviously, I think the fair that's the price target guidance, of course, but the fair value today I think is more of $24 to $25, and even I think, yeah, Simply Wall Street has it there too. Probably, but I would still buy it anywhere below $30. I already own shares. So that's like the price target guidance, and that's why I think they'll be able to get there because of partnerships, acquisitions. They've been kind of in their best financial situations ever. A really great company. And also, like I said, all these other things. Galileo, now he has insight information, and so he can apply it instead of just scheming and talking about it on social media. He can start really talking about it, not talking about it, but executing on it for the company, kind of, and really work closer with management to really better the company moving forward. And I think that'll allow him to really be a hyper changer, especially in Arcimoto. Then Sandy Monroe. It feels like everybody's like getting on the ball now. Even the CEO, Mark, said himself, he expects it kind of to be shallow as far as the units, how much they grow per year. But right now they're just playing it and executing so that they can really, right now they're just really trying to put them in the best place to reach mass production, which is 50,000 plus units per year. And on their Q3 earnings, they said in 2 years they expect that. So in late 2022, yeah, and it sounds so weird to me, but on 2022, okay, and then also in 2020, or like late 2022 to 2023. So what I expect for this company, Arcimoto, Tesla, they're on total different levels than a lot of companies. Arcimoto, they're very efficient with capital. They seem to do really good at always building more value and really putting them in the right place. And I really think this acquisition that they made, that's going to be big. It's going to make it not just be safe